Let's take a look at some other examples here. Here's a inside day here. It also has a small real body. We could go ahead and draw our channel on that. All we do is start at the top of the bar. Let's draw it all the way across just to kind of give a sense of how sometimes important these inside days are. This particular inside day, you can see that it has a lower high than the previous bar, and it has a higher low than the previous bar, so it does, qualify as an inside day. We would have gone long just above the high here, which was 67.97. We would have gone long at 67.98. It never broke the low of this particular day, so we would have gotten filled right in here, right around 67.98. First profit target probably would have been someplace right in here. Second profit target probably right in here. We would have hit two profit targets. We would have had day 1, day 2, day 3, day 4. We would have gotten out at the open on this particular day. So that would have been a very successful, profitable trade. Now take a look at this inside day, and if you take a look at the channel that we've drawn across here, we've just extended it. It turned out that the high of this inside day was also support for this particular bar here, in which the trade actually, the stock actually at that point started trading higher. So it can act as resistance and support. Let's take a look at some other examples. This does not qualify as an inside day. I started looking at this, but it does have a higher high than this particular day in front of it. Let's take a look at another inside day here. That's not an inside day. That's not an inside day. They're fairly frequent, and you can find them, but you just have to kind of go through it. Pretty soon you get you'll have a very, very, very good grasp and understanding of the inside days. Here's an inside day here. It does have a fairly wide body. It's probably 60% of the previous bar, but it turned out to be a good trade. We went long here. We exited. Our first profit target was right in here around 83.12, so we got a little bit over. The high of that bar was 81.74. We would have gone long at 81.75. So we got about a point and a half here in our first profit target. As I mentioned, this provides sometimes it provides support and resistance points. The trade actually did start to come down a little bit. It broke through here, and upon re-entry into this 25% area, you could have gone short again and then exited, someplace down in here. Actually, it traded back up into this area again and then sold off dramatically after that. Let's take a look at some more recent ones here. This was a really good trade. The high on this particular inside day was 68.38. We could have gone long at 68.39. We would have hit at least one or two potentially. We hit profit target 1, profit target 2 on the same day. This is day 1, day 2, day 3, day 4. We would have exited at the open on day 4. So we would have hit a couple of different profit targets on that one. This target here actually turned out to be a fake out. It went higher and then it gapped lower, taking us out of the trade here, and that one didn't work out so well. Let's take a look at some other stocks here. Just at random. Let's take a look at Starbucks for a second. Let's see if there are any particularly good opportunities here. Here's one trade that was quite nice. Nice long red bar here, although the size of the bar preceding the inside day doesn't really matter. I have noticed that if it has a large real body and then a small real body afterwards, the trades tend to be a little bit better in quality. In this particular trade, we had our entry at $17.44. It traded down. It hit target number 1. It didn't hit target number 2. This low right here turned out to be $16.88, and our target was $16.82. You could have, anticipated maybe that it wasn't going to hold that low or go any lower at that point, and could have exited your position. Otherwise, you would have exited at the open here on day 4 on your position. Let's see what else we can find here. Let's go over to SanDisk. And there was a profitable situation back here in January. I'm sure there's many more. Sometimes I get bored of a stock and I move on to other ones. But in this particular day, we had a fairly wide bar here, but it has small real body, followed by a small real body, narrow inside day bar. And our entry was here at 28.74. The very next day, it hit our target number 1. The very next day after that, it hit our target number 2. At that point, the stock started selling off, and it probably would have been a good idea if you did see this particular day sell off to exit your position at the close of that day when you see that kind of a reversal going on, because you really want the price to continue in the direction of your trade. And if it doesn't, and if it reverses below, many times what I'll do is I'll set 50% of this bar here. So in other words, if I get an entry here and I've got a nice large bar here where I hit my first target, I'm going to set 50% of that bar as my target, not to go below. But it did hit our target number 2. So if you had multiple shares, for example, on this trade, or if I was doing this trade, I would sell 500 shares at 29.79, and then I would sell out the remaining half of the shares at 250 shares at 30.82, and then as it started pulling back around 50% of this white bar here, I would sell the remaining 250 shares. So that turned out to be a very profitable trade. Let's take a look at some other trades, including some other stocks. Let's take a look at a really high flyer like Potash, which is a very high price stock. Normally I found that you get a lot more and you get much better signals and setups on trades on stocks between 20 and 40, maybe even $60 is fine. Let's take a look at this just in case you like to trade higher price stocks. This one in particular, it looks like there's a inside day right in here. All we have to do is go in and take our channel line, set these up at the high and low of the inside day. In this particular instance, we would have entered a short position right here, which was a low, which is 1 cent lower than the low of this particular inside day, or we would have gone short at 177.71, and right now it's at 170.20. So you can use different types of stocks. You can use high price stocks. You can use low price stocks. It doesn't really matter. Let's take a look at Nvidia. This stock has been absolutely all over the map. Let's take a look and see if we can find any inside days on this particular stock. Let's see, we'll go back here to July of 2007 and see if we can find any setups here. I think there's one right here. We had a long red body, and we have a small body inside day right here. We can set up our channel lines right in here. Now remember, for these particular trades, we don't care if the stock goes up or down after our entry, because we have orders on both sides. In this case, we had a long red bar. We had a small white bar following it, which is our inside day. We would have gone long right in here, which is just above our high price on our inside day at 22.56. We would have gone long. It looks like it did trade down below the low here, and we may have gotten stopped out right in here before hitting our profit targets. But if we had stayed in this, it would have been 1, 2, 3, 4 days. We would have had a nice little profit here. Many times, depending on the stock, I mean the stops that I set are 1 cent below the low here, but you can actually set different types of stops depending on your comfort level. In this particular case, you might have wanted to have set your stops a little bit lower, maybe even the low of the prior day's bar, especially if this particular bar is on the lower end of the bar that precedes it. So you can set your stop down here rather than setting it to the low of this particular day. It does increase your risk a little bit, but it does give it a little extra room to move as well, and this would have been a profitable trade had you had done that. Let's take a look and see if there's any additional opportunities in Nvidia here. We're looking for inside days that look particularly good. Normally, if you take the higher range bars here and then try to find a inside bar against those tend to work out more often. Let's see here. This is totally random and totally unplanned on my part. We're just kind of taking a look at some inside days. Here we go. Here's an interesting one. We've got a long range red bar here, which I tend to like when setting up these types of trades. Now, the inside day on this one is actually a fairly large bar and a fairly solid bar. In other words, it has a fairly large real body here. But let's take a look at this one. Like I said, none of these are particularly perfect, but they do, work out. So you would have had an entry at the high of this, 1 cent above the high of this bar, which was $32.68. So you would have entered at $32.69 right in here. Now this did kind of reverse and go back down, but it didn't go into the lower 25% channel range. So you would have been able to stay in this trade, and you would have set your. I would have set my stop limit at the low of this channel, at the low of that bar, which was 31.47 minus a penny, 31.46. And the trade did actually go higher, and it looks like you probably would have hit at least one target, maybe even two. 1, 2, 3, 4. You probably would have gotten out on this day right here. Let's continue in Nvidia, see if we can find any other opportunities here as they were presented. Now remember, you can do this on any stock. So if you're scanning several different types of stocks, you can also do this on multiple issues. Here's another inside day. Let's take a look at this one. So you can see there's plenty of opportunities out there. This particular inside day is quite interesting because it actually ended right at the high of the day. In this case, because the low, this is a high upper real body and a white bar besides, I may have set my stop a little bit differently, maybe down here, maybe in the 25% range, but we would have gotten filled just 1 penny above the high here at 36.14. The high of this inside bar is 36.13. We would have gotten filled at 36.14 right in here. We would have hit at least one profit target, and certainly on day 4 we would have hit our second, maybe even our third profit target on this particular day. This was actually looks like a very, very good trade that was set up here. Let's continue to go down here, see if we can find any additional trades. But the trades that you find are just all over the place. Let's take a look at some more random stocks, maybe from some of my watch list here. Let's take a look at some very liquid, highly liquid stocks like Proctor and Gamble here, and let's just take a look at some of the trades that may have been set up that we could have gotten into here. Let's take a look at, here's one right here I see immediately. Here, just the first one I see. We take a channel line, go up here, high, low. Didn't look like it violated the low. We would have gone long right in here. We would have hit at least one, maybe even two profit targets on that. Let's keep skimming along here, see if we can find some additional opportunities. There's one right here. We take the high of that, bring it across, take the low. Our entry would have been just above the high of this inside bar day, which was 60.24. We would have gone long at 60.25. Our stop was down either, like I said, you can set your stop below this bar here, your inside day, or the prior or the day before that. So you could have set your stop down in here if you wanted to give it a little bit more room. But in this case, we hit day 1, day 2, day 3, day 4. We would have hit at least 1, maybe even 2 profit targets on this particular day. For aggressive traders, if you think that the particular stock is in an uptrend, here's something very interesting. I've got a 20-day moving average here that it appears to be support for the stock. If you wanted to, you could have had a little bit more confidence in this position by just exiting a portion of your trade, maybe even saving a small lot to continue higher here in this trade. Let's scan along and see if we can find some additional opportunities in Proctor and Gamble. Here's one. I mean, there's lots of opportunities for doing this. Very few people actually try to pick up on these, though. It's unusual. Whoops, I picked up the wrong tool. I've got to pick up my channel line. It's right around the same lines, though. I would have picked up this inside day here. It looks like it did break through, but it was a fake out. It did end up closing in the lower 25% range here, in which you probably could have gone short at that time, and you probably would have hit at least 1 profit target down here. It's not the ideal setup, though, because this bar is particularly weak. It's not a large solid body bar, and this one is not a small body bar. So they're about equal, so I'm not really sure if that... I mean, it's not a strict criteria. The criteria really is that as long as it's an inside day, you can trade it. But once you get used to, once you start doing these more often, you start to look up and pick up some of the nuances of the particular type of bars that you would like to trade. And your appetite for risk, your aggressiveness, and other factors would probably indicate which bars, which setups you actually want to take and those that you don't want to take. For example, this is a very large red bar here, and you've got this fits the definition of an inside bar, but I don't think I would take this one because of the size of this red bar. It's just something, and also the size of the inside day bar. Normally, this inside day bar would be much larger than any of the bars preceding it. So I would not consider this to be a narrow inside day bar. It definitely is an inside day bar, but it's not a narrow one. So I would not take that trade. Here's one that looks particularly good that you could have traded. Let's just check and make sure. The high of this particular day is $60.14. The high of this day is $60.13. So you had a potential trade there. You would have gotten filled at $60.14 on this trade, and you would have hit at least 1, 2, maybe even 3 profit targets on this one. The low on this, the stop level on this, I probably would have set to the low of this bar, the previous bar. That would have been my stop right in there. Only because it closed in the higher end. I think I probably would have preferred a stop down here just to give that trade a little bit more room. And if I gotten filled on the short side, I probably would have set the stop at this. Actually, these are pretty close to being similar, but I would have set it up there as well. Let's take a look and see if you're getting bored with Procter and Gamble, we can move on to another stock. But I just want to give you some examples of actually how frequent these happen. These are not rare occurrences. They actually happen quite frequently in the markets, and they are tradable events. Here's one that I don't want to give you all examples of ones that actually would have worked out very, very well and always perfectly. Let me give you this as an example. The high on this was 61.92. The high was 61.92. Okay, if you have equal highs like these two bars I'm talking about right here, the highs are identical, 61.92 and 61.92. That is not an inside day trade. I would not have taken that trade. It looks close, but I would not have taken it. Here's one in particular. It looks interesting. We've got a long red body with a tail. We've got an inside day that actually has a small real body on it. I'm trying to find some losers for you if I can, but I want to give you as many examples without rehearsing or any kind of rehearsal at all on these. These are totally random picks on my part, just to see if we can find inside day trades. In this one in particular, you would have had a short entry at the low of this bar at 59.74 and an entry on the high of this bar at $60.18. You would have gotten filled right in here, and you probably would have hit at least 1, 2, maybe even 3 profit targets based on day 4. So you've got day 1, day 2, day 3, and day 4. You would hit all 3 profit targets probably on this particular trade. That was a nice one. Let me see if I can find some that are failures and total losers here. Here's one. Here's one that probably would have set up okay. You've got a white bar and an inside day. Now this inside day is fairly large, but it is tradable. You would not have gotten filled on the very next day at 1 penny below the low of this bar. The low of this bar was 61.45. You would have entered your order to go short at 61.44 or long at the high of this bar at 61.88. That would not have gotten filled. This would not have gotten filled because it gapped down. It did not trade back up so that you could get filled. It did trade back up to get filled on this day, which is interesting. You would have gotten filled at your short position here at 61.44. It would have never gone into the upper 25 percentile range. It would have never triggered your stop loss. But you're talking 1, 2, 3, 4 days. You would have hit maybe 1 profit target here and exited the position because it was day 4 of the position. So you would have gotten out at that time. So that wasn't a big winner, and this is kind of an unusual setup. So that was a good example for you of sometimes these things do happen. Here's a losing. I'll pick out a loser for you. I don't think I would have traded this because the prior day was kind of an odd small body day. I like large real bodies rather in my candlesticks prior to my inside day. But this one in particular would have gotten filled on your long side here. It would have gotten stopped out the very next day. However, it had an opportunity here for a reverse play, and you may have hit 1 or 2 targets back on the 4th day. But this would have gone up, gotten filled, and then it would have gotten stopped out down here. So that would have been a losing position for you, losing setup. However, you could have, if you were interested, you could have reversed the position and gone short, and you would have hit maybe 1, maybe even 2 targets, profit targets on the other side of that trade. Let me take a look at some more. If we want to, we can change stocks. Let's go over to IWM. Now, you can also trade this. It doesn't necessarily have to be a stock. It can be an index like the IWM. In this case, we have an inside day here. We've got it gone short here. We probably would have hit at least 1, maybe even 2 profit targets. In this case, I use this as a I use this inside day as a support and resistance point. And what I did was, here, let me show you. I lost it. Where'd it go? Oh, here it is. As I mentioned, you can use inside days as support and resistance points, and as soon as this came above this top channel area here, I used it as an opportunity to go short on the IWM only because it looked like it was establishing a new downtrend. And that's one kind of side benefit, a nuance of inside days, is that they do act as support and resistance points, and prices tend to vacillate around them sometimes. At this time, I was looking at shorting the IWM, and it was a great opportunity because it did dip above the this particular high of this inside day. It closed below it, and it offered an opportunity to sell, which turned out to be a very, very good trade. Days just beyond that. Let's see if there's anything else available here in the IWM. So it doesn't necessarily have to be a stock. It could be an ETF as well. Let's see. Here's one right here. I don't think this would have gotten filled though. It has a nice ideal setup because it has a nice large red body. If that was a large white body, it would have been the same thing. But you've got a large red body with a small bodied spinning top candle. Pretty much a spinning top. It's got a fairly fat white real body in there, but still, you would have entered your position to go long just above this bar and short just below it. You would not have gotten filled on either one of those. After day 4, you would have closed your order entry positions and not gotten filled on this particular setup. But it did trade higher, and if you did have an opportunity to get into it, it would have worked that well and probably hit one or more profit targets. But in this case, it gapped much higher, and it did not trade back down, so you would not have gotten filled. And that's fine. Like I said, don't chase these trades. Just let them go.